Hello everyone, my name is Khan and welcome to the new video. In this video, we are going to learn that how we can trade after taking out the inducement, after taking out the liquidity, and what is order flow and how we can use in a higher time frame to lower time frame. A lot of people are struggling to find the valid order flow because to identification of the order flow, there are different things because sometimes what happened, market take a pullback and then what happened, we are still using that order flow because those are already mitigated, but why you are using that order flow. So in this video, I will explain everything in detail that which order flow you should use to marking our PY for the buy and sell. And also I will show you that how you can refine our order block on this order flow and which order flow is high probability to taking out the entry and to marking our PY, because only order flow is not area when we can only buy and sell, because you need some additional confirmation before to marking any valid order flow like inducement and liquidity. So in this video I will show you everything step by step. Let's start from the diagram first, then I will show you on chart, then you can understand very easily. So as you can see here in the front of the screen, 1 and 2 and 3 diagrams are in front of our screen. So which one is used for the inducement and liquidity? Let's talk about the first diagram is here. In this diagram, what happening here? Market momentum showing bearish and creating lower lows. So if market momentum is a bearish and creating lower lows, and then after that what happened? Market taking out the previous high, that's called inducement. And if market taken out the inducement right here, so after taking out the inducement, what happened? Two scenarios are possible here. First one is here, after taking out the inducement, if market taken out the inducement and then wait for to mitigate our unmitigated order flow. So where is our order flow in this scenario? So this is our last buying momentum before the sell is here. It means we can sell here after mitigation. This order flow is here. So press tap on it and then we can sell here. This is our first scenario. After taking out the inducement, we can sell here. And what happened here if market not create here any order flow is here? And what still we can looking for the sell. So how you can deal in this situation? After taking out the inducement, either market sweep this high. After sweep this high, we can plan here for the sell after lower time frame confirmation at that point, right? And the next scenario is here. After taking out the inducement here, market push downside and break this low. So we can plan here for the sell on this order flow is here. Why? Because this order flow is already taken out the liquidity. So we can use this zone as a strong zone for the sell here. Right. So this is our first scenario. Then how you can sell here? After taking out the inducement, either market sweep this high, then we can sell here at that point. Then we can sell here at that point in a lower time frame confirmation. And also, if price not create here a lower time frame confirmation, we can also sell here directly on this order flow mitigation here, because price taken out the liquidity means the inducement and market went down. Okay. The next entry is here. After broken this one, we can plan here for the sell. This area become more high probability compared to the first one. Why? Because after taking out the inducement, this area grab the liquidity. So we can plan here for the sell. Okay. Now let's talk about the next diagram is here. In this diagram, you can see market momentum is a bearish and creating lower lows in a downside. So in this scenario, what happened here? Sometime what happened? Market taken out the inducement as market done here. But sometime market break the two previous lower high is here. So this high can be go higher to break the 1, 2 and maybe 3 multiple highs in a bearish market. And then what happened? Market push downside. So in this scenario, what happened here? This is our inducement and this is our liquidity. Why this is liquidity? Because multiple high is a sweep here. In this scenario, only one high is a sweep here. That's why we are marking as an inducement. So this is our inducement, or you can say liquidity, because of the trend line. But in this scenario, you need to sell after broke this low. So this is our last buying momentum before the sell is here. Break this one, and after broken this one, market take a pullback here and we can plan here for the sell. And this is our strong zone for the sell. Okay. And this is based on the order flow entry, because this is our order flow is here. Okay. And sometime what happen here? Market create order block is here. Probably market create order block is here. So this order block sometime mitigate and sometime not mitigate. So it depends on situation. But probability of the mitigation of the order flow is a higher compared to the order block. But in order block, you can get big risk reward is here. Okay. But in order flow, you can get a small risk reward for the buyers and sell. Okay. And the third diagram is here. You can see clearly same thing happening here. Taken out the liquidity because of the trend line liquidity is here. Trend line liquidity means the lower lows and higher highs, higher low, higher high is creating here. Once market break this one, multiple higher lows is taken out. And after that, what happened here? Either market mitigate unlimited order flow is here. If no, then market must create here any bullish confirmation here, creating higher high here, taken out this low, push higher, and this zone become high probability for the buy at this point. So these are three diagrams that how you can simply buy and sell using inducement and liquidity. This is a very simple way. Let me show you on chart, then you can understand that what I mean to marking our order flow in a higher time frame, and also how we can identify which order flow is a high probability for the buy and sell, and which one is our major order flow and minor order flow. Minor means the structure between the higher low, that's called minor. Major means the major structure which creating higher highs or lower lows. Let me show you on chart, then you can get more better idea. Okay, so as you can see here in this structure, market creating higher highs like this one. It means if market momentum is a bullish, and simply we are looking for the buy after taking out the inducement and tap on unmitigated order flow. So this is the first scenario is here. And also, if market not taken out the inducement, then market must we create those order flow as a liquidity, then we can plan for the buy or sell. So in this situation, you can see here how market reacting here and how we can plan for the buy and sell. Look at this structure here. Market creating higher highs here. It means structure showing bullish here, and finally market taken out this all low, and then market went up. It means what happened here? It means when market taken out the liquidity, the trendline liquidity is here. So this low is a grab the liquidity. So this area become high probability zone for the buy, right? So same thing happening here. You can see here, this is our previous high is here, means the structure is a broke here. You can say this is a continuation pattern here, right? And at this point, this area grab the liquidity. This is our liquidity grab here. And after grab the liquidity, break the structure and looking for the continuation. So how we can deal in this situation? Look at this one, market creating higher high, market not came back that point. If this low is a came back this point, so we can plan here for the buy, where this is our last selling move before the buy is here. It means if price came back this point, so we can plan here for the buy. This is our order flow. So if you are not able to understand what is order flow means the last buying momentum before the sell or last selling momentum before the buy. That's called order flow, which must be unmitigated order flow. So in this case, these are last selling move before the buy. That's called order flow. And one more thing is here, you can see this is also, and this is also the last selling momentum before the buy is here, right? So these are order flow. So in this case, if price trading at that point, so which point we should use as a order flow when we are looking for the buy, right? So in these two diagrams, you can see the first one is here, this taken out the liquidity. It means this area become high probability for the buy. But at this point, you can see here, this is our unlimited order flow. But problem is here, this area not grab any liquidity and also market not plan here for the buy. If price came back this point here, something like this, so we are not interested here for the buy. Why? Because this low act like an inducement, and after inducement we are planning here for the buy to the upside. And also if price take a pullback and then market went up, so we can take a risk here for the buy at this point. Why? Because this low act like an inducement, and after taking out the inducement we can plan here for the buy. Okay, so let's see what happened next here. And one more thing I want to mention here, this is our order flow here, right? And when price tap on it, so simply we can plan here for the buy and put the stop loss just below of the order flow. Where is target the previous high, which is almost 3 RR. Okay, and one more thing is here, if anybody wants to trade based on the order block, right? So which order block we should use as a valid order block? Look at this one. If you are using, this is our order block is here, right, at this point. So this is our valid order block or no, right? So this is actually a valid order block. But problem is here, we can't buy here, because if you are buying or selling without any inducement or liquidity grab on any order block or order flow, that's called SMT, smart money trap, right? And where is our next high probability order block is here, right? It means if price came back that point, so we can plan here for the buy. Okay, so I hope you understand what is order block and what is order flow. Order flow means the last selling move before the buy here, and order block, the last selling candle before the buy here. That's called our order flow, and that's called our order block. So this is a very simple way to identification of the order flow and order block. So in this case, this become our inducement. So once market taken out the inducement and tap on unimmediate order flow, which one is the tap here? So we can plan here for the directly buy here. Why we are interested here for the buy directly? Because this area grab the liquidity. So if this area grab the liquidity, it means we can take risk here for the buy at the time. Only direct entry. We don't need to use lower time frame confirmation here. And also, if price tap on this order block here, we can also buy here directly and putting the stop loss just below the structure here. Okay. And where is target? The previous high as a target here. Okay. And this is our next entry based on the order block is here. Right. So let's see how price react at this point. Let me show you exactly. This is our order block entry and this is our higher high and this is our stop loss. You can put this one. This is a safer side and this one also we can put here. Okay. So in this case, you can get a 5R. In this trade, you can get 2.5R. Means that double. Means you can say based on order block, you will get a 2x reward compared to the order flow. Okay. But the problem in an order flow and order block is here. Execution of the entry is a higher compared to the order block. Order block sometimes miss, sometimes hit stop loss. But when market create a valid entry on order block, then you can get a big risk. Okay. So these are pros and cons in order block and order flow. And there is no fixed rule that which one you should use like order block and order flow. It's all about depend on you that which one is suitable for you. Sometimes maybe order block is suitable for you. Okay, so you can continue with them. If order block is not suitable for you, so you can trade with order flow, which is very simple and easy to trade. So let's see what happened next here after this one. Market push downside here. Okay, and then what happened here? Market take one more chance here. And let's see if market like mid it get this one, so we can plan for the buy. Okay, so market not came back this order block here and finally market hit our target point. Okay, so why this move happened here and why and what is the reason to mitigate our unmitigated order flow is here? Because after taking out the inducement, price must be create this one and price tap on it. This is our unmitigated order flow is here and this is our refinement of the order block. So once price tap on it, so we can get very good risk reward here. But unfortunately, market not mitigate this order block, so we missed this trade. But based on the order flow, we can get this trade, and we are getting 2.5 risk reward here, which is absolutely good here. So this is our simple way to trade based on the order flow and order block using liquidity and inducement. So this is a very simple thing is here. Market create one more structure here. So one market create a new higher high is here. So this structure looks like this one. This is our previous higher high is here. This is our higher low here. And this is our one more higher high because market break this one. And again, what are you looking here? Simply we are looking for the buy after taking out the inducement. So these are higher high creating here. And after creating this one, you need to wait for it to mitigate the unmitigated order block is here and unmitigated order flow is here. So this is our order flow is here. And where is order block? This one. It means once price tap on it, so we can plan for the buy. This is a very simple way here, right? Why? Because this one is our liquidity. Once market taken out the liquidity, price tap on it, so we can plan it for the buy. And this is a direct entry here, right? And if market not able to create here any entry here, right? If you are willing to take some additional confirmation for the buy, so how you can deal in this situation? Simply you can deal in this situation, create the structure, broke this one, came back this point, and we can plan for the buy. So this is our next simple process to buy after structure shifting here in a lower time frame as well as here. Okay, so once price tap on it and create here lower time frame confirmation, so we can buy. And also if you are not interested to switch in a lower time frame, so you can directly buy here without any lower time frame confirmation, just taking out the higher time frame inducement, taking out the liquidity and wait for order flow mitigation. So this is our order flow is here, which is our unmitigated order flow. The last selling move before the buy is here. So once price tap on it, we can plan for the buy because just below it, there is no unmitigated order flow here. This one is here. The last selling move before the buy is here. So this one is a broken and mitigation and there is no unmitigated order flow is here. That's why we are using this one. Price tap on it and we can plan for the buy. Again, what happened here? This is our last selling move before the buy is here. This one. So we can plan here for the buy. Again, which point we can buy? Here. And where is stop loss? Just below it. And where is target? Target you can set based on the Fibonacci tool and you can also trail the stop loss and you can use also a set target here. But when you are looking for the based on the order block, so where is our order block and where we can buy? This is our actual candle here. Look at this one. So once press tap on it, so we can buy here because this is our last selling candle before this buy here, which is unmitigated here. So it means if press tap on it, so we can plan for the buy to the upside right here. So this is our entry based on the order block here and the previous entry based on the order flow, right? So this is order flow and this is our order block here. Again, what happening here in this case, market continue going higher high is here, and this is our internal structure. If you are thinking why we are not buying here and why price failed here, because this is not break this high. If market went up and push downside, so we can plan for the buy at this point, okay, but market not break this high. So this is internal structure and creating between this and low, right? So if market create between the high and low, so we can set target and stop loss based on the internal structure. In this case, the market again break the structure because taken out the liquidity, wait for the unimmediate order block is here, order flow is here, which one is a tap here. So this entry mitigate based on the order block here. Again, market continue going higher high, break the structure, and this is our internal structure going higher high. This is our trend line liquidity here. So once market taken out the trend line liquidity here, simply you need to wait for it to taken out the order flow when we are looking for the buy. So where is our order flow? In this case, you can see this is our last selling move before the buy is here, right? So which one is already mitigated here? So if order flow is already mitigated, so in that case, we can use the order block because order block is a refinement version of the order flow. So where is our liquidity? This one. So this is our liquidity. After taking out the liquidity, we are interested here for the buy. At which point we can buy here? If you are thinking this is our liquidity here and we can plan here for the buy at this point right here on this order block, which one is here, right? Why not this order block? Right, for the buy, because this is an inside move, means the internal structure. This is our previous high, previous low. So you need to use this one, and this one looks more better compared to the first one because just below it, this one is also unmitigated zone here, right? If you are interested here for the buy at the point, but you need to put the stop loss just below it. You need to find an area when we can buy and sell and proper stop loss of. And you need to set a proper stop loss based on the logic, right? You don't need to put the stop loss randomly. So this is our area when we are interested for the buy at this point. So this is our area. This is unmitigated order block is here. So if price tap on it, so we can buy here. But price not mitigate here. There is no order block mitigation here and market went up, okay? But when market taken out the liquidity is here and market start structure shifting here, so we can think about it buy here. So this is our structure like this one, push downside and going higher high, mitigation, and we can buy here at this point based on the order flow. So this entry can mitigate at this point right here, put the stop loss just below it, and this is our target right here, okay? And can we go higher? This is just explanation here that how you can simply identify our order flow and order block. Order flow, simply you need to identify first inducement or liquidity and wait for taking out the inducement and liquidity, and then you need to identify where is our unmitigated order flow and order block, because order flow and order block only work after taking out the inducement and after taking out the liquidity. So if you are following this process, then you will get a very good trade, and also you will get most of the time high probability setup for the buy and sell. And this is not only happen in a bullish market, you can see in every market. When market trying to push downside, then market must be taken out the liquidity and taken out the inducement before a push downside and before push higher, okay? So in this case, as you can see here, the market momentum was bullish here, and this is applicable in all time frame, right? 15 minute, 1 hour, 5 minute, 1 minute, and 4 hour as well as here, okay? So in this case, you can see here, this is our structure shifting here higher high because this is our last structure here, push downside, taken out this one, and we are interested here for the sell, but market not break this low. If market break this low, so we can plan for the sell. But market again creating higher high, it means the structure shifting to the higher. So we are interested here for the buy after taking out the inducement, taken out this one and mitigation, price type on it, and then what happened here, create new high, but unable to create new higher high and market pushing downside here. It means this is an indication that market looking for the sell, because this is a previous new higher high, break this one, and after break this one, that's called our inducement. But below it, there is no unimmediate order flow and order block is here, right? So where is our order flow and order block is here? This one, because this one looks unimmediate order block is just below it. After taking out this inducement, this is only unimmediate order block is here. So if price tap on it, so we can plan here for the buy, okay? And also you can take direct entry, you can take a lower time frame confirmation. So you can get entry here at this point right here. Where is stop loss? Stop loss should be below it. And where is target? The previous high. So this is entry and this is your stop loss here based on the order block, right? But remember, after that, what happened here? Market failed this one. It means the structure shifting here. So you need to understand what happened here. This is our structure and market went up, taken out this liquidity here. It means this area grabbed the liquidity. So in future, if market tap on it, so we can plan for the sell. How we can sell? This is our last selling move. How we can sell here? This is our last buying momentum before the sell is here. This is our last buying momentum before the sell at this point. Once price tap on it, so we can generally sell here is here. Where is stop loss? Stop loss should be our weight, right? And this is only area when we can sell at this point. And this is a process that simply you can trade here, okay? The first stop loss is here because the structure was bullish, taken out the equity and pushed downside. And again, we are looking for the buy at this point, but this area is a failed here. Again, what happened? Market break this one and now your perspective will be changed. And how? Because this is a area grab the liquidity, then we can sell. You need to understand very few and simple thing. If market pushing downside, right, push higher, maybe taken out this liquidity here, and then market pushing downside. It means this area grab the liquidity. That's why this area become more high probability for the sell. So once price tap on it, we can directly sell here. And also if you are interested here for the sell in a lower time frame, so you can take it, okay? Otherwise, you can directly sell here also. And if you are interested here for the sell in a lower time frame confirmation, so you can refine this zone as a lower time frame, like this is a lower time frame refinement probably, okay? Because this is a 5-minute time frame, so probably you need to switch here in a 1-minute time frame for the lower time frame confirmation here. And after that, what happened? We can sell here, okay? And also you can take direct entry here in a lower time frame, but you need to put the stop loss just above the high or low of the order flow, okay? Let me show you an example, then you can understand better. For example, this one is here, the entire order flow is here. It means we can buy here in a direct higher time frame. And what happened here? If market looking here for the buy in a lower time frame refinement, so you need to refinement this area in a lower time frame in a 1-minute time frame, because this one is a 5-minute time frame structure, right? Let me show you here in a 1-minute time frame structure how it react here and how we can plan here for the buy to the upside. Look at this one. What happened here? This is our entire order flow here, and you need to identify where is our last selling move before the buy here, which must be unmuted here. So this is selling momentum before the buy is here. It means once price tap on it, we can plan for the buy. So this entry can be here and put the stop loss just below it. And in this trade, you can get big risk reward like 4 hour, and first trade is a 2.5 hour. Means if you are following the higher time frame order flow, you can get a smaller risk reward, okay? But problem is here in a lower time frame, sometime market tap and sometime not, okay? But if you wish to trade only order flow, so in that case, you can this order flow for the better risk reward here compared to the first one, okay? But problem mainly you will see, but main problem you will face in an order block, because once market hit our order block, then you will get a very good risk reward, okay? But no, if no mitigation, then you will miss multiple position for the buy and sell, right? So this is a simple process to use the order flow and order block. And this is the only area when you need to pay attention for the buy and sell. I hope this will help you understand that which order flow you should use for the buy and sell. And this is a very simple way. You don't need to make it complex. Simply following the structure, if market creating higher highs and lower lows, and wait for it to take out the investment and taken out the liquidity. And then what happen here? Structure shifting here and wait for pullback mitigation and then buy and sell. Simple. Creating higher highs like this one, taken out this one. This is a liquidity and market went up. And again, what happened here? Market came back this point. We can buy here at this point right here. And maybe if you are interested for the refinement, so simply you need to switch here in a lower time frame. Maybe you will get a one more order block is here and here. So we can plan here for the buy to the upside. So this is a very simple way to use the order flow, and the order flow only mitigation by a pilot pullback, right? You can see here in this case, this is a last selling move before the buy here, but multiple selling candlestick form here. But this is not a pilot pullback here because this is a order flow, right? And after that, what happened here? So many candles form here. If market create here a valid pullback, So this become our mitigation. Okay, again push downside, this one is a mitigation, again going higher high. So we should use entire zone as a order flow. Okay, because in a lower time frame there is no unlimited order flow, right, in that case. But right now market create unlimited order flow, so we can use this one and press tap on it, put the stop loss just below it of the main structure, and then we can plan for the buy at this point right here. Okay, so this is our process, that how we can simply buy here. And this was one more entry here, which one is here, this is last selling move before the buy is here. In this case we can see here also where is our order flow here in a lower time frame, this was here, right. And where is the next one is here, this one. It means two unlimited order flow is here in a lower time frame, this one and this one. But press not tap anyone and press just follow the higher time frame order flow is here, mitigation and then buy. So these are pros and cons. Market not mitigate every time in a lower time frame as well, as because market follow the higher time frame first. Okay, so thank you so much everyone to watching the entire video. If you are new, subscribe our YouTube channel and join our free Telegram channel, link in description. Go and check out, where I will update a lot of new things, and I will see you in our next video. Happy trading.